What's going on, YouTube? Now, this shouldn't, but this video might ruffle a few feathers, perhaps. It shouldn't, though, because we're all trying to get to the same place, in my opinion. A viewer, and I will drop his link in the description, doesn't make content, but that could change, you never know. Johnny, aka Grumpy Buffalo, actually requested that I do this, so I'm going to talk about this a little bit. I want to start with a couple disclaimers. Number one, I am not sponsored in any way by anybody to do this video. There are no affiliate links. I have reached out to one company that I would like to do an affiliate program with. I'm not going to mention that company in the video. We've been emailing back and forth, but Johnny asked me to do a video because he knows that I mentioned that I don't just hold physical metal, and I just made a mess. Oh well. And he has asked me to touch a little bit on stocks and bonds. Now, I'm not going to recommend any particular thing in this video. I am not a financial advisor. There is risk in anything that we do. There will be some of you that love physical only and despise paper markets. Hey, I get it. For a long time, I was that way. I still am that way fundamentally. But I've also come to realize that for me to get more of this, I need more of this. And to get more of this, to get more of this, I need to figure out a way to make more of this in different markets. Okay? Cutting costs, making profits, gains, so to speak. So, I'm going to touch very briefly on the stock thing. Okay? Again, I am not sponsored by anybody to do this video. Stocks are very speculative, very risky. You have your blue chip stocks that you can invest in, and you can use a brokerage. And I'm not promoting one over the other, but some people use Robinhood, some people use TD Ameritrade, some people use Webull. Whatever your thing is, okay, it's very speculative. I've done very, very well in the stock market, and I've done very, very poorly in the stock market. I've held everything from certain mining stocks, some of them are dogs, to certain medical stocks during the thing, back in the day, and I did very well on those. It's very speculative, but we're at a time now where you can get into that, and you can do it very cheaply with pretty much zero commission trades. I'm not going to recommend anything. I'm not going to give any further details on that, but that's something I've done in the past. Something else I've done. And the bonds is what I really want you to pay attention to. That's really what I want to touch on this video. But I'm not going to get there yet. I wrote down some figures, okay? I did my homework. I have, and this is what comes to mind. I'm sure I'm missing something. I have 1, 2, 3, 4 savings accounts, okay? High yield, if you will. And the reason I have so many is because they started paying high yields back when the interest rates were going up a little bit, and then they dropped off. And see, you can take advantage of the Fed raising the interest rates because, yes, while they raise rates on the lender, they also increase savings rates. Now, whether or not that keeps up with inflation, it's hard to say. But I have an account with Live Oak Bank, which all 4 of these I'm going to list are all online banks, by the way. Live Oak pays 4% a year. So that means and 4% sounds appealing. That's for every $1,000, that's $40, which I'll have to pay tax on. PayPal, love them or hate them, I get it. 4.3% is what they're paying me. That's $43 a year. Capital One, 43%. I actually really like Capital One, I'm not going to lie. I have a checking and savings account with them because I can just transfer it immediately from checking to savings or vice versa. Use the debit card, pull it out, whatever I got to do. The highest yield savings account I have right now is Wealthfront. 4.8%. It just went up today, I believe. Funny how that works. They announce rate increases and the savings rates go up. Weird, kind of like what I was just saying. So that's $48 a year, pre-tax. I wanted more. I don't know if you heard my phone go off, but I forgot to turn the volume down again. It's down, but not off. I've been with a company that I don't hold U.S. Treasury bonds. Don't like the government. Don't want to be in bed with them, so to speak. I hold bonds, and I've been with these people for years, at least 3. And I think at the time they were paying in the high 3%, maybe 4%. What they do is it's kind of a peer-to-peer lending thing. You are the lender. And of course there's risk with anything you do. I've never lost a penny. In fact, all I have done is, profit from this. What they do is they have certain offerings that they have, and they do get bought up, and then sometimes you'll go a while before there's any bonds available to buy. But you are the lender. You are lending to people, and they're backed by collateral, so that if they default, whoever the business you're lending to that you're trying to help grow, if they default, their assets are sold and the bondholders are paid. To my knowledge, that's never happened. Like I said, I've never lost a dime. And what I really like about these folks, and these are the folks I'd love to do an affiliate link with, just because I think, I think it's a great thing to do to help other businesses grow, but I also think it's a great way to park my money in bonds that are paying me 5.5%, which is, again, only $55 for every $1,000 invested in a year. But they pay me interest every day once the bonds clear in their purchase, which takes about 4 or 5 days. But I get to see it every day. I don't wait all month. And it's a great place for me to park this, to get more of this, if I don't want to put it in something else, to get more of this. Okay? That's where I'm going here. It's the highest percentage of savings. And again, it's only 5.5%, which sounds great, but when you break down the math, that's, for every $100, that's $5.50 a year. For every $1,000, that's $55 a year pre-tax. It sounds great. It's a pretty good rate, I think. Again, and I feel safe doing it. I've been with these folks for years. I've never lost a penny. I get to see the interest go up every day. And it's somewhere I can, again, not a financial advisor, don't have a crystal ball, there is some risk, but it's somewhere I can park some of this and make more of this until I decide, that I want to take it out and do something with it. I don't have to let the bonds mature. There's no, minimum to leave it in. There's zero fees, one way or the other. Zip, zilch, nada. I love that. And I get to help things grow. I get to help, businesses, do what they need to do by using my capital. So my point in this is that there are many ways that we can get more of this in the stack. And, I understand, again, if you're not a paper market person, the stock market's got a whole lot more risk. I'm going to say that now. Stock can go to zero. If I see my bonds not start to pay me out every day, you best believe I'm selling them. Hasn't happened. There's some collateral behind it. I get a help. I really like that. So there are things you can do. I'm not going to divulge the company in this video for a couple reasons. It's limited on the amount that are available. I don't know how many are out there, but I've seen them sell out on many rounds for over the years. And quite frankly, sometimes it takes a long time to get new offerings to buy. This time they started a second round long before the first round has sold off, which is fantastic. But I'm not going to divulge the company here. I think it's just another way for me to save more of this. And of course I keep some of this, obviously, in the safe. But that is a depreciating asset, if you will. I know this is going to go down. At least if I have it somewhere and I'm making a guaranteed, pretty much guaranteed, has been so far, daily rate of return, I'm not losing as much of this. So hopefully I can turn it into more of this. I hope that helped. I hope I answered your question, John. I've been kind of vague. I understand that. I have my reasons for that. Again, I've not been sponsored in this video whatsoever. If you could take a moment to like and subscribe. And if you didn't like the video, save the hate. I understand some people are physical only. My end game is physical, and I just want to get as much physical as I can. Land, metal, cash, that's my end game, okay? I'm just trying to get there, and I think you're trying to get there. Not a financial advisor. Like the video, subscribe to the video, comment on the video, tell me what you think, save the hate. I hope you learned something. I hope you took something away from this. Again, not sponsored by anybody, not getting paid to do this. This is just my opinion. It's kind of my job to tell you. It's about who's watching. Okay, I want to make your life better. I want to pass on, what I've learned. Take it, leave it, use it, don't use it. Whatever benefits you. That's my end game. That's my goal. Today is Saturday morning, Friday evening, Saturday morning. This video will drop Sunday. Hope you all learned something. Like, subscribe, comment. Keep stacking.